So Theo, I went overseas in June, and I've come back, and when I left, the rand was okay, the markets were okay, South Africa was in a good place. I've come back, looks like our stock market's down, the rand's nearly at 14 to the dollar. What did our politicians do?
Warren, this has got nothing to do with our politicians. Actually, if you look at the different inquiries going on, the different policy statements, we're actually slowly moving in the right direction from a political point of view. The weakness of the currency has to do with emerging market weakness. And you can take it back to Donald Trump's trade pronouncements, his trade actions, which obviously creates uncertainty and leaves emerging markets a lot more volatile, but also a lot more vulnerable. Now, the rand has weakened, but it's weakened less than most other emerging market currencies. Some of them are down 2 or 3 times as much as the rand is down. Our viewers, and we maintain with a view that a rand stronger than 13.50 is almost a trigger where you should start long-term diversification offshore. Any portfolio and any person, any investor should have a portion of his assets overseas. Now that depends on where you are, how big your assets are, if there's assets for next generations, if you have to earn a living from them. But that percentage will be determined between you and your advisor. The key is you have to have international exposure. So it's a question of how much. Now that is determined by you and your advisor. When do you do that? That's another point. We believe you should do it over a period of time. That means it's a process. Perhaps take a quarter every 6 months, or a third every 3 months or 6 months, depending on you. But we believe 13.50 is the level where you start that process, not at current levels. Over the long periods of time, the rand comes back to a purchase parity differential between us and the US. We're currently at the top end of that purchase parity graph, and we believe we'll get back towards 13.50, which will be the trigger of this process. But this conference you talk about, what was it about, and what's your takeaway?
So Theo, I went to a thing called Fund Forum International, which is the largest fund buyers conference in the world, and takes place in Europe every year. It moves from city to city. This year it was in Berlin, and it's really 2 groups of people that attend. One would be wealth managers and financial planners, mostly from independent wealth management firms and from large private banks. And then secondly, it would be people who buy unit trusts on behalf of clients. So those will be big fund managers, pension funds, and then obviously the wealth management businesses that have that fund buying capacity. So it's a really interesting place to go to as a South African, just to see what are the differences between the international industries, especially the European industry, and then ours. And for me, what I learned from that was a couple of things. One, I think the wealth management industry in South Africa is really advanced. I think we're actually quite far ahead, for example, of the UK, both from a regulatory point of view and from the way that we actually do our business. The other takeaway for me was around funds. So there is a big emerging market focus on these fund managers at the moment. They're all looking at emerging markets. But for them, emerging markets really means one thing, and that's China. For example, out of all the discussions I went to, not once was India raised as a topic of conversation at all. And that's easily the second biggest market for investors to look at. And they are totally focused on only one country, one market. And then I think the last one would be about technology and the way that technology is impacting the industry. Asset managers are really fearful of artificial information, of machine learning. They think that there is a huge risk to themselves and their industry. And I think that there is a role to play with technology, where I think it's going to reduce the number of people in the industry. Will it replace all human beings? I don't think so. And then the second thing for me that I learned from technology, which hasn't really been a focus before, is around quantum computing. And that those exist already, that they actually are working. Google have quite a few iterations of quantum computers out there already, and the potential and very real risk that they pose to the security of our assets. So quantum computers are perfectly designed to break through all encryption that we know about today. So I think the encryption industry and I guess the security industry is due for a radical shake-up in the next 2 or 3 years. So for me, those were the big takeaways from this conference.
Great feedback, and it is comforting to know that the best in South Africa can compete with the best in the world.